My name is Mark Chalmers, and I'm President and CEO of Energy Fuels. Energy Fuels is a remarkable opportunity for those investors that are looking at decarbonizing and improved electrification on steroids. So very excited to be here today, Matt, to talk to you, give a bit of an update on our company from Toronto, right after PDAC.
Brett, well, yeah, you're at PDAC. You're in Toronto. It's all finished and wrapped up now, and I know you've got a plane to catch. So I'm gonna get straight into it, Mark. Let's start with some pleasantries. So, was PDAC successful in terms of what you went there to try and do?
This was probably the busiest PDAC I've ever been to for Energy Fuels. So, it was well attended. A lot of meetings, a lot of people wanting and ready to do things, and it was really a solid conference, better than the past.
Right. Okay. And in terms of what you went there to talk about, clearly you've got a lot of moving parts. You've kind of got the vanadium, you've got the uranium, you've got the rare earths now. So what were people really coming up to talk to you about?
All of those. Okay. But I have to say, I wish you could just sit in our booth for an hour or two and listen to the people that come by, showing the excitement and admiration of the advances we're making with rare earths and everything we're doing. So, look, it's, we're going for it, Matt. I've said that before. We're setting ourselves up for absolutely, well, we had an incredible 2022, and 23 should be every bit as good, if not better, as we start to launch. I feel like we're down the runway and we're pulling the yoke back, and this plane is starting to fly.
Right. Okay. But like I say, we're going to keep this short and sweet because you do genuinely have a plane to catch here. So look, I think $1.3 billion company, it takes something to build those sorts of things, but you kind of got to keep this thing, you got to keep this engine ticking over. You got to tell a growth story. But there's a bunch of decisions you made last year in 2022, which, have cost the company. You committed some big capital to various projects. I mean, do you think you did that at the right time?
Absolutely. I mean, you got to spend money and you got to do stuff to build a company. And we've got people working underground right now, getting 4 mines ready, not ready in 6 months or ready in a year. I'm talking ready, like if I called them on the phone, they could start mining ore. Look at the plans that, with the acquisition of Bahia in Brazil, we bought that, closed that. And on top of that, we're building out the separation plant at White Mesa. So, we're investing in the future. You also are aware that we sold Alta Mesa. And we closed that in February, $120 million. That funds us non-dilutional. We've also made the uranium sales. We've got our uranium contracts that start this year. And I tell you, I couldn't be on a more positive note on what the future holds for Energy Fuels.
Right. Okay. I think the Alta Mesa deal obviously brings in $60 million in cash now, and then $60 million in terms of a convertible note for you. So that has some future value too. But I've got to keep coming back to it. It's like the amount of money that you committed to spend last year is, for most people in an environment like 2022, it was sort of exceptional. So there's got to be a huge degree of confidence about the market for rare earths, the market for uranium, and vanadium. Obviously, you can't forget that. That's still there in the background. And you've made a bunch of acquisitions, committed a lot of capital. But tell me where this confidence comes from. I mean, what have you been able to secure? I mean, if we start at the uranium price just isn't moving at the moment. So why would you spend money trying to, advance the projects, get ready, and to be able to be in production, imminently if you needed to be?
Well, I mean, I think the confidence of having long-term contracts that are 8 years of long-term contracts, we want to get the flywheel going. Hiring people has become more difficult. And it's better to get people on board and trained and advancing and getting that momentum going. So on the uranium front, we said we got the contracts and, we're going back into production. So that having that as fallback to secure our ability to go forward, very important. Now on the rare earth fronts, again, this focus on the United States and having the processing capability and securing molecules for processing in the United States and integration has never been stronger. And but you got to be on the front foot here. So, we have confidence on all fronts, and that's all being reflected in the securing of the contracts. Doing the uranium reserve sale, and filling those new contracts starting this year. So it takes time though, and when everybody says it's going to be 6 months or a year and a half, well, you got to start sometime to be ready. And when we started last year, it cost some money. But it's all reinvesting in the future of Energy Fuels.
Right. Then let's look at the time frame for revenue. You kind of mentioned one of the things. Obviously, the award of the contract to sell $18.5 million bucks worth of uranium to the U.S. Uranium Reserve. That's a good start, but it's a small dent. The Alta Mesa 60 million plus 60 million. That's quite nice. That's quite meaningful. But you're going to have to find other ways of making sure that you do deliver non-dilutory equity investment into the company. Are you now tempted, given the conversations we've had in the past about the fact that, as far as you're concerned, White Mesa Mill does not need to buy, or it does not need to, toll mill with other people's ore. You are more likely to choose to go down a route of buying and having a buying schedule than actually tolling other people's mill, and on a fifth, and that would be on a have you decided how you would like to structure that? Have you had any further thoughts about that kind of revenue stream?
Yeah, Matt. We have a toll milling agreement with CUR where we're their largest shareholders, and that's the one we have. But we did announce when we announced the sale of Alta Mesa that we were looking at a buying schedule. Okay, and a buying schedule is where we just basically say we will buy your uranium or ores, and we don't have it in place yet, but we plan to, and we really are looking for a slight uptick in prices to put that in place. But what we basically do there is we say, well, we'll buy your ore for between 40 to maybe 50% of the contained value. We then process it, and then we have ownership of that ore and the marketing rights to that, so people can provide their ore to the mill, delivered to the mill, assuming they're in full compliance with all their regulatory permits and whatnot, and then we go from there. Now there's a long history in the plateau of a buying schedules, and we'll do something very similar to what's been done in the past, and frankly, that 40-50%, depending on the grades and the uranium and the vanadium, is actually a very fair price. It's a fair price because it costs a lot to process it, and you're putting it into a plant that if you had to replace it today, it'd probably be $500 million or something. So, but we're definitely going to get our clip on that, and anyone that would participate in the buying schedule.
Right, and I want to be clear here because at the moment it feels kind of monopolistic in the sense that EU controls the mill, controls the district, but there's been lots of chatter in the market about people refurbishing and getting old mills up and running. I think there's at least two people talking that game, and there's talk of previous builders building a new mill, and therefore introducing a bit of competition for you. But what are the kind of what are the difficulties actually doing things like that? Clearly, there's a capital requirement, and the cost of that capital is in today's environment looks expensive. So that they need to be darn sure about what how much they're going to process and the price at which they're going to be able to feed into that mill. But that could be competition for you. Potentially competition for you. Would that affect your ability to negotiate, good deals for yourself, or do you feel that the reality is right now you're in control? You're still in control because you can make you can affect their margins. You can affect the ability of those companies to make margins.
I'm not worried about that at all. I mean, if you look at the time to get the permits, the cash required. It is so far out. If anyone could do that in the next 10 years, and that's probably being optimistic, 10 years, they would be lucky. And there have been some that have made attempts to build a new mill or whatever, and they never accomplished it. So look, we're we have a mill. It's operable. We've got people there. We know how to process uranium. It's debt-free. There is currently no need for another mill in the United States other than White Mesa ready to go. So no, I don't worry about that at all.
Okay, so I want to be clear. You've got one tolling agreement, but that's with a company that you sold an asset to, and you will be talking about tolling the ore from the asset that you sold to them, and you're managing that asset. And secondly, as far as you're concerned, the timeline in terms of permitting and licensing to build another mill and the cost of capital is going to be, well, perhaps the hard bit here for someone to kind of come in and give you competition.
The region only needs one mill. That's all. It needs one mill. And so, but look, good luck to those that are going down those paths. As I said, it's a big undertaking and it's an expensive undertaking. So I'm not saying that, people can't make their own decisions if they want to go down that path. But meanwhile, we'll put out a buying schedule. It'll be competitive, similar to what's been offered in the past. And buying schedules go back like 40, 50 years in the region. This is not something new. So, I'm not losing 1 second of sleep over the thought of other people building or saying they're going to build a mill or retrofit a mill in the region at all.
Okay. And but again, sticking with this a little bit further, do you feel that you are in control of that negotiation as a result of that? What happens because you need to feed your mill. What do you need to feed your mill? That's the question. You can feed your mill with your own ore, and clearly it's a big mill, so ideally you can top it up with, this buying schedule that you've got in place. You can find additional ore to kind of process there. What happens if people outside don't play ball and they don't sell you their ore?
Well, we'll feed it with our own mines, okay? Looking at historically over the last, cycle, there was a small amount of feed that came from others with the buying schedule, but it was very small. I mean, I'm going to throw out a number of maybe 10, 20% of additional feed that we processed at the White Mesa Mill. So even though it was good for us, it didn't make us. And look, it's if there's others that have feed, we'll add it to a mill run, but it isn't that big a deal or material, and there hasn't in the last 10 years. But look, hopefully in this new cycle, we'd like to run that mill, 24/7, completely full of feed. And if that was the case, I can tell you, pretty much every permitted mine in the region would have to be running at full capacity to even come close to that.
Right. Okay. Well, I guess it's these are options for you and discussions for you further down the line. But you will let us know when you come out with this kind of buying schedule, or the conversations that you have with this buying schedule of yours. Let's get on to rare earths, because that's a super, super exciting bit. Okay, critical minerals list, security thereof for the U.S. government, number one priority. Those conversations are being enabled by things we've talked about in the past, the IRA, the Biden administration, Inflation Reduction Act, and so forth. Are you seeing any other kind of signals from the U.S. government that they are showing serious intent in providing the capital to allow that part of the industry to succeed in the West, in the U.S., ex-China?
Well, look, I think it's continuing to amp up. I mean, there were a lot of government agencies here at PDAC. We had a number of meetings with various government agencies. We're just trying to look for the right fit, the right vehicle when it comes to, whether it's a loan, whether it's, some of these grants, depending on where the money comes from, that makes sense for us. I think, these geopolitical tensions don't appear to be going away. And, and we're there to capitalize on it. We ordered all our parts for this phase 1 separation plant, have been ordered. I've talked to our operations people. They are very excited about getting this rolling. And they're doing work, building that out right now. So, less than a year from now, we'll have this completed and built. We're getting a lot more inbounds. The the groups that are looking and talking to partner with us is almost nonstop. And now I know a lot of our investors are waiting for more news on that front, and I really believe we'll be in a position to give more updates to the market in the not too distant future. But then the acquisition of Bahia is another step, but we're looking for other opportunities, and we're going for world scale. It's that simple.
Right.
And no one's in a better shape than us to do that in North America and pretty much anywhere in the world.
Right. And with regards to some of those, I get the US government departments conversations, they clearly want to understand what's going on. But in terms of other strategic partners, we talked in the past about NEO, obviously helping you out in the rare earths side of things, early days, and Constantine, is a big part of that. But are you seeing other strategic partners wanting to get involved with this? Do you need other strategic partners and their balance sheets to kind of help you get over the line? Or do you feel that you're in control of that and you want to retain all of the upside?
Look, there's a lot of strategic partners. The ones that have infrastructure, permits, and have the ability to amp up or ramp up our feed of monazite are definitely of interest. From a balance sheet perspective and from a capability perspective, we really have the ability to do all the capital improvements we need for both the rare earths and uranium right now. But we'll always look at things that make sense, right? And if your goal is to become a multi-billion-dollar company, we're already north of a billion. There's different ways to get there, but our focus is this, all things critical elements, and really, and that's where we're driving it, and utilizing our infrastructure. I think the other thing that is important for people to know that, when we look at the strike rate to build like this phase 1 separation plant, we're telling the market is like $25 million, and that's probably being a bit conservative, but nobody can hit that strike rate in terms of being able to build a separation plant for that kind of low capital. And overall, our strike rate on capital is going to be probably 25 cents on a dollar of what others are going to have to spend to do the same thing. So that's a huge advantage.
Well, tell me a little bit about the market. So I know I'm very conscious that you've got a cab waiting and you got to hit the airport. But what your view of the kind of capital markets at the moment in the context of what's going on with the kind of macro environment? I've been to a number of conferences, and we've had our guys at a number of conferences, even up at PDAC as well. But PDAC in Australia, down in Miami, down in Cape Town. And the general feedback for some of the junior explorer types, obviously companies a lot smaller than you, is that money's tight. Money it's hard to access, and they're looking for all sorts of alternative financing, including early royalty agreements, convertibles, all sorts of kind of strange and funky structures, right? And does that help you or not help you, or is it kind of irrelevant with regards to your quest for access for monazite?
Well, we haven't had to go out and raise any money directly for some time now. Certainly selling Alta Mesa, that puts us in a strong cash position. Look at it as far as securing money. In our eyes, the key thing is just demonstrating that you're making material progress and people can understand that you're getting there. Okay, I think there are some people out there that are still saying, well, is Energy Fuels going to get there, whatnot? I can tell you we are getting there. And with that, with the scarcity of product to invest in, right? When you start looking at the scarcity of product to invest in, when you show you're getting there, there is absolutely no shortage of money that will go into the right kind of investment.
Yeah, I agree with you. And when my question really wasn't about your ability to get money, you've always found it remarkably easy to access capital when you've needed it and you timed it right. So I'm not judging you on that. It was more a case of other opportunities for you with other companies that may be struggling on the cash front, in terms of your ability to put contracts in place for access for monazite from those sorts of companies which perhaps are a little bit cash strapped, or struggling to raise cheaper capital for their needs.
Yeah, no. Look, I think there are, and as I said, we're canvassing all opportunities that we can wedge ourselves in. However, we need to wedge ourselves to continue to build this story on how much monazite we can secure, and if we're more than happy to help some of those that may be struggling, to potentially infuse some investment in them to get there. So yeah, I mean, Matt, as all these things, there's a number of different moving parts that can impact, how you go about doing your business here. But yeah, we're in a strong position, and people realize we're in a strong position. So, yeah, I mean, again, just have to continue to watch this space, but it's unfolding rapidly. And as I said, the number of meetings we had was staggering.
But just remind me, because it was at the beginning of the conversations. As far as you're concerned, you have set yourself up for success in 2023, and by that you mean what? What are the things that are going to hit in Q1 or Q2, which people should set up and pay attention to?
Well, we closed Alta Mesa, so there's a big cash inflow there. That initial $60 million will be in the bank. We've got the uranium sales, the $18.5 million there. We've got our sales contracts that are coming up, and I think that's like June or July, and that's pretty much in the order with the uranium sales with the government. We have a number of other smaller transactions that are happening. We get interest on the note from enCore, and we could be making more uranium cells, vanadium cells, rare earth carbonate cells. We are at a true rotation point here. It is a true rotation point, and as I said, we're building our revenue stream faster than anybody in the sector that I know of, certainly in North America, but there's a number of things hitting here, and they didn't hit in 2022. So 23 is the year that these things are going to start hitting in a rapid fire.
It's old school. You focus on making money. I don't know. It doesn't sound right, Mark.
No, yeah, that's our focus. And Matt, you know this. We're doers. We're a real company. We've got this great relationship with Neo, ourselves, Chemours, and others. People, and then the utilities. I mean, they know who we are and they respect who we are, and we're proud of who we are. We're not out there trying to sell a bunch of baloney. We're builders.
It's been a great story. It's a great story to follow. I think 2023 is a super exciting year in terms of deliverables for you, and say getting a bit old school and actually trying to make some money. It's very refreshing to hear about. So good luck to you. Safe flight home. We'll speak again soon.
Thank you, Matt. Always a pleasure.